All right. Good morning, everyone. It is 9:20 on the morning of October 28th, 2022, and this is my pre-market strategy session. Sitting here next to me this morning is my first son, Adam Barr. Adam, would you like to say good morning?
Morning.
There we go.
Make sure you see the Adam Schmam.
Okay. Adam,
Yeah.
Adam has an Adam Schmadam channel that he wants you to tune in also.
And my daddy will be on that channel too. He's only made a few.
All right. So the title of this morning's video is Q's tagged neckline in after hours. Now, look at that. I mean, doesn't get any more picture perfect than that, right? Which actually, I don't really like to see that very much. I wanted to see this happen during regular hours of trading, not in the post market. And it's annoying because usually the bears are the ones who get tricked. You know, being bearish is tough. Profiting on the bear side, on the short side, is tough to do. It's a lot easier to put your money into an equity and just let time do its thing. You know, it's not timing the market; it's time in the market. Really, for the bulls, you know, they don't really have to do much. They put $100 somewhere for 5 years. When they come back and look at it again, they just kind of expect it to have gone up. You know, for the bears though, it's pretty much you've got to be a really good trader in order to make money on the short side, and the shorts get tricked a lot. And this is one of the tricks that happens is the after hours. I expected to see this move happen during regular market hours during a bear market. Pardon me, but it didn't. So in the after hours, here's the tag of the neckline. Now the neckline is this long-term trend line that I have going here. You can see. And it is the neckline that is part of a head and shoulders formation. So it's really annoying that this move happened overnight and not at a point in time where I can profit on the options that I have on this trade. So that was an additional roughly 2% move to the downside. And usually when that happens, usually when the move that I'm looking for happens in the aftermarket on the bear side, on the short side, it usually means that that move has been played out, at least for the short term. So I am most likely, I started getting into short positions back here on the 25th, and so I'm likely to take profits today. I think there were some terrible earnings reports last night. The all the economic reports are coming out. I mean, GDP was positive, but looking under the hood of GDP, it's kind of not all that great. There's just a lot of things going against the economy right now, and against these tech earnings. The tech, the Qs are tech heavy. The Qs are all tech. That it's just kind of like, okay, well, for the short term, I mean, I'm talking, 4 to 6 weeks out. We've got Christmas coming up. There's the Christmas rally on the horizon. There's just, unfortunately, it looks to me as though this sort of down zig, this down zigzag, is probably not going to play out. So I'll be taking profits this morning after the bell opens, which is in another 5 minutes. The VIX is coming down below its risk range. The 10-year, 2-year spread here, whenever we get downdrafts like this, we get down moves like this, that's good for the market. The market likes that. The market can continue going up and downdrafts. It's not until we get the up moves. And I'll change it to the monthly here so you can see. This so May of 2007 is when we got the crash, and that's when this yield curve started to normalize. 2001, the yield curve started to normalize again. We got the crash. 1989, the yield curve started to normalize again, and that's when we got the crash. This green up move right here, that's when the market crashes, when the yield curve starts to normalize again. And we are, let me get this out of the way. We're not really, let me get my drawings out of the way. We're not near correcting. We're, here's the zero line, and we're down here at negative 37.6. So if we start another leg down, in the 10-2 spreads. It's positive for the Qs. It's positive for the SPY. Positive for so on and so on. Yeah, if you were to match up, I might do that one morning. If you match up these up regions in this downturn with the 10-2 spread behavior, you'll see that the spread going to the south equals the even into inverted territory. The spread going south is positive for the market. So looks like I'll be taking profits, and it's always the case, almost on every trade. No trade. It's very, very rare that there's ever a perfect trade, and so it looks to me like I'll probably cap my gains on this recent move, and it certainly sucks that I didn't get. I really was looking for the touch of this neckline right here to take profits on my trade, and it's a significant amount. I mean, 2% translates into several hundreds of percent in an options trade. So just I got to be happy with what I did make. So all right, everybody. Bitcoin is really surprising here. Really interesting happening. I don't think it has much longer to go until it starts to crash. But if it can stay above this 19,000, roughly 20,000 into the end of the month and the start of next month, there could be something developing on Bitcoin. There could be something bullish developing on Bitcoin. Amazon it is in the dirt right now. Incredible. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you on Monday morning's strategy session. Have a great weekend, everyone.